Intro, banks are quietly taking your money every single day, and I'm going to show you exactly how to stop them. It's happening through a series of almost invisible tricks, hidden fees, and complex math that's designed from the ground up to keep you paying more and them earning more. But once you see it, you can't unsee it. And more importantly, you can start fighting back and keeping that money for yourself where it belongs. So get ready, because we're going to break down the 5 biggest secrets that banks absolutely hope you never find out about. The interest rates they advertise versus what you actually pay. But here's the secret. The advertised rate is almost never the full story. Banks are masters of using compounding schedules and hidden fee structures to manipulate the effective rate you either earn or pay. They might compound interest less frequently on your savings, or they might structure loan payments so you're paying almost entirely interest for the first several years. A study from the Consumer Financial Protection Bureau found complex fee disclosures can increase costs by over 20%. For savings, they might advertise a high APY, but require a massive minimum balance most people can't maintain. If you dip below it, the rate plummets to practically zero. For loans, it's all about amortization. Short version, first years. Interest heavy, principal barely moves. Always ask for the total cost of credit. Look for APY on savings and APR on loans. Plug in the bank's numbers and see with your own eyes how much interest you'll pay over time, or how little savings will grow. This simple 2-minute check exposes the reality behind their marketing. Next up, secret number 2, fee engineering. Banks bleed you dry with 1,000 tiny cuts. Monthly maintenance fees, overdraft fees, ATM fees, inactivity fees, paper statement fees, small individually, $5 here, $12 there, but multiplied across millions of accounts, over $12 billion in overdraft fees in 1 year. A subscription posts before your deposit. The system flags an overdraft, slaps you with a fee, and moves on. You can stop most of this. Call your bank to learn how to waive maintenance fees. If they won't, move to a no-fee online bank or a local credit union. Opt out of overdraft protection. Let cards decline instead of paying $35. Plan ahead for ATMs or use a bank that reimburses fees. For miscellaneous fees, switch to modern online banks or a member-first credit union. This next secret is about your favorite piece of plastic, the credit card. We all love getting those rewards. 2% cashback, airline miles, hotel points. The secret is the interchange fee, the engine of the industry. This cut is typically between 1.5% and 3.5%. They take around 3%, kick you 1 or 2% back, and pocket the rest. Merchants bake that fee into prices, so everyone, including cash payers, subsidizes rewards. Banks push premium rewards, higher annual fees, higher interchange, more profit per swipe. Their real goal is for you to carry a balance. Don't pay in full, 20, 25, 30% interest. That 1% interchange profit is nothing compared to interest. Rewards are bait. Tactic: never ever carry a balance. Treat your credit card like a debit card. Match your spending to the right card. If you spend on groceries, get 5% back on groceries. Be a transactor. Pay in full every month. Maximize payouts to you. Give them 0 interest. Secret number 4. Loan amortization. This applies to mortgages, car loans, student loans, most big loans. Your monthly payment isn't split evenly. Early on, it's heavily front-loaded with interest. Example: $400,000 at 6%, about $2,400 a month. Nearly $2,000 is interest. Roughly $400 hits principal. Banks know many sell or refinance within 5 to 7 years. Front-loading guarantees they collect most profit early. Over 30 years, you'll pay over $463,000 in interest on a $400,000 loan, more than the house itself. Fight back, make extra payments. 1 extra per year or round up monthly. Ensure extras are applied directly to principal. You bypass the front-loaded schedule, shave years off, save tens or even hundreds of thousands. If affordable, refinance to a 15-year term. Banks hate it. It cuts their profit machine short. The 5th and final secret is your data. They see every paycheck, every bill, every grocery run, every late-night pizza, every trip. Every transaction tells a story. Banks realize that story is an asset they can sell. They're not just banks, They're data brokers. It's called data monetization. First, they target you with their own products, balance transfers, pre-approved auto loans. Second, they share aggregated data with partners or let advertisers target you on their platforms. It's buried in the privacy policy, pages of legal jargon granting broad permissions. Immediate action. Log in now, open Privacy Choc data sharing, and opt out of marketing-related sharing and affiliate sharing. You'll cut down temptations and take back a piece of your financial privacy. For a stronger stance, consider a privacy-focused credit union with a member-first ethos. And there you have it. 5 of the biggest secrets banks use to quietly pull money from your pocket. The illusion of interest rates, engineered fees, the real math behind rewards, front-loaded loans, the selling of your data, opt out of overdraft, make one extra principal payment, use a no-fee bank, pay credit cards in full. Guard your data. Thanks for watching. Please like and subscribe.